Hello everyone, welcome back to another video. In today's video, we're going to discuss how we can use the volume profile to simplify the order flow chart. So this is especially for people who are new to order flow, or even if you're used to order flow. Sometimes it becomes a little overwhelming to look at the order flow charts, look at the numbers, and then make sense of it. So what we're going to do is we're going to look at the order flow charts and break it down into small volume profile charts. So I'll just explain what I mean. So firstly, what I have on my chart is the bank nifty futures. So for the sake of ease, and we can use options, it works very well on options. In fact, all the concepts of order flow and volume profile that we keep talking about, or rather what we're going to talk in this video, work very well with options as well. So you can deploy it on options as well if you're scalping over there or you're doing intraday trading over there. So to start with, what I have on the right side is the bank nifty futures 5-minute chart. This is a very simple volume profile chart. So you can see the various clusters that are taking place, or the high volume nodes or the low volume nodes. So I've done videos on how you can use them. So this video is going to be an extension of that, in the sense that we're going to use the order flow along with that to help us make more sense of what is actually happening in the markets. So what happened in the recent session, or the latest session, is what we had was a very tight range that you can see over here, and it becomes a little difficult to trade on days like this. Of course, there was an expiry, that is why this happened. So the first example that we're going to take is the initial move down over here. Again, this is something I keep talking about, and which will use the same principle on our charts today with respect to the order flow and the volume profile. So you have to pay attention to these low volume nodes. Let me get a darker shade over here. So these low volume nodes that you see over here, that is one here, and the market of course takes resistance over there. The other one is somewhere here, the next one is somewhere here. Now I pay a lot of importance to these. Not that I don't pay importance to high volume nodes. Again, you can go and look back at my videos. So these are rejection zones. Essentially, there has been aggression of some sort that has taken place. So when you look in the order flow charts, what you'll see over here is something like lines like these are absorption or aggression lines. So the green one is the imbalance zones that we create because of 2 or 3 consecutive zones that are formed. So if you look in these charts, okay, so these red dots, if you see over here, are the imbalance that has been created. The percentage that I've kept here is again 300%, or 3 times. So again, this has been done in the previous video. So just for the sake of refreshing, I'll repeat it. So the imbalance zone is nothing but, when you look at it diagonally, the difference between the buy and the sell is approximately 3 times more on the side where you see this zone popping up. So for example, over here, when the market was going down, it went down with aggression, and you could see these red dots or magenta dots, whatever they are, on the sell side. Similarly, the thing that you see on the right side is something like this, with the help of green dots. And this, what you see over here, is absorption. That is it's blue because it's absorption. So what has happened here is you've got 2 or 3 red dots aligned together, and it was not tested, and you could see this. So it's actually red, but it's plotted in blue because the market hasn't tested this. On the other hand, if the market would have closed below this, it would have been painted red. So this is nothing fancy, but just to let you know. Similarly, on the upside, when you see a lightish orange shade, it is absorption that has taken place. Again, the market has gone up and the buyers are trapped and they could not move up. So we've got these zones around us, and if you see, for almost 1 hour the market kept trading between these zones. So the idea on expiry days sometimes is exactly this, to trap people on both sides, and the market exactly ended on the middle of the session. Now we're going to use these imbalance zones along with volume profile. So the first area, or the place that we're going to look at is this one at the lower end. Now if we just you can see this blue line coming on the 5-minute chart. That is nothing but a POC from the previous few days. So let's see which date it was. It was, I think, the 6th and the 7th of August. So there was a lot of volume that has been accumulated here. You can see this, and this is what it I mean, it plays out very well. So you're going to use the high volume nodes, use it as targets, and on trending days, it's better to use the low volume nodes as your rejection zones. Again, I'll repeat it for days when you have consolidation, something like this. Okay, the recent day that we had. Now you can use this zone. If the market opens tomorrow and comes over here, maybe then you can use it as a rejection zone, because the market was consolidating, it didn't go anywhere up, but it opened above value, and maybe it touched here and then it moves up. So you won't find any low volume nodes on a day like this, whereas zones or days like this, when you have a trending market, these low volume nodes are of great significance. They offer you great opportunities, like the one that has been offered right here at 955 or so, and this high volume node that has been coming from behind is a target of sorts. And if you see the area where it actually takes resistance of is this low volume node on this node day. So when you see a line coming from behind and it is a place which has been, I mean, defended for so many days, of course you're going to get a sort of a resistance or a let's say time being spent in this zone, which happens over here, and the place where it takes resistance from is somewhere in the low volume node on this day. Okay, so let's go ahead and see what we have come here to see. So we'll go into the order flow chart at about 9:30, 9:25, when you see aggression that has been taking place, and then we'll break it down. I'll just explain what I mean by that in a volume profile chart for people who find it a little bit overwhelming to look at the order flow chart. So if you see, I have not on purpose, I have not got any numbers here. The only numbers I have here is the volume that is being displayed here, the delta that has been displayed on top of the bar. Okay, so that is again nothing fancy, and the two numbers that you see here, they're just COT high and low, which we're not going to discuss. It's just for I have it on the chart, so we'll maybe take it up some other day. So the only thing that we're going to see are these three numbers, that is all. So, and if you miss these numbers and the market is moving too fast on for you, what we have done here is just added the volume here, and wherever you see these whitish volumes, again there are pickup in volume as compared to the last volumes, and the red part is the delta. So again, instead of having delta percentage, you can straight away see that how much of the percentage of the bar of this volume was delta. I mean, so you can see it is negative over here, so obviously there is aggression on the sell side, and how much of it is a lot of delta. And quite interestingly, if you see, I'll just show you, this is what happens. This is not I mean quite for this particular day, it happens a lot of times when you see the volumes picking up. The volume has come down, and look at the delta percentage. It is certainly gone up. The delta is the highest amongst these three bars, and look what happens after that, after this bar. Okay, these guys are all trapped. So this is a very common phenomenon. Okay, so in a trending market, if it had to go down, what it would have done is, if the market was trending, it would have come up. You see this area, I'll just delete it, and then we'll go deeper into the chart. So if you see this area where you have a lot of imbalance zones popping up, and this small blue line that you see is the VWAP of this bar. So what happens is, generally if the market had to go down, what it would have done is either would have gone down from here, which is very common. You can keep checking this on trend days, or the max it could have done or would have done is come here and go down. Okay, so these are two areas when we are going to expect the market to move or continue in the other direction. So for example, if you wouldn't have been wrong if you would have let's say taken a short right here. When the market comes up, you would have got certain points. If you look at it, you would have got almost 100 points of this touch of this VWAP, where the volume was really high and the delta was really high. So you wouldn't have been wrong if you attempted a short over here. As soon as the market touched here, you got almost 80 to 100 points. The next time you attempted a short was somewhere here. Okay, the market came here, and again from this point it would have given you 50-60 points. It moved out of the POC and went on the other direction. So you would get good points or good places on aggressive bars like this. So the next time when you see an aggression is this place, and let us see, if you would have attempted, let's say a long over here or somewhere here in this zone from where the market broke out, this exact zone, you would have got certain points. Let's see, again 60-70 points. So these are good places. You can see the market just halts over here, this place, because this is a zone where a lot of sellers were trapped and the market just simply halts over here. The next place that would have been really good was these absorption and imbalance zones. Now let's get deeper into what happened in this bar, is why we've come here in these 3 bars in these 10-15 minutes. So what I've done is, this is a chart that I've got. Again, I've put 30 seconds, you can go to 1 minute, and I have these 15-minute or 5 to 7 minute bars that are these volume profiles that are being plotted for 30 seconds. So what it is doing is essentially plotting 5 to 7 minutes of volume profile. And what it helps us do is, I will just get it here so that you can easily understand. I will just explain what it does. So you can do this if you are finding it a little difficult to dwell deep into the order flow chart. So we'll just get into the point where we are. Okay, so this is the point where we are. Okay, and I will get this here, and what I have below is nothing but simply just volume. Okay, and now if you look at this order flow chart and look at this chart, so obviously these candles is something you can neglect. If you're a price action trader, it's good, but the just remember, it is too short a time period. What I've done this essentially is for the volume profile, so that I can get a sense of the price moving along with the volumes that are getting accumulated. So this is again essentially for understanding what is happening if you are getting it or you're getting totally confused or totally overwhelmed by the data that order flow presents. So let's look at the 920 bar, and over here you can see the bars where you have great volumes is somewhere here. Okay, so I'll just get the marker over here. So this is a low volume node that has been left across. Again, the VWAP of the bar is somewhere here of this whole area. So what it is doing is, within this is a small volume profile that has been plotted. This is the VWAP of the volume profile, and these are the various nodes, and the blue one is the POC of this particular place. So what I have done is, I have broken down this order flow chart into small segments exactly the same, so that I can simplify what I'm looking on the left of my chart. Okay, now when I look over here, what the other thing that I'm getting over here is, look at these volumes and delta. So the exact same thing I'm getting over here in the form of volume profile. Now the first time this happens, again, this is a high volume, and this is approximately the same volume with the delta just decreasing. And what I get to see over here is the chunk of the volume is associated here. And if you look closely over here in this bar, again in this bar, and again in this bar. So what do I get to see? The first thing I get to see, if you've seen the video where a lot of you have doubts about that, the market profile concept. Again, for people who are new to market profile, just don't worry about it. It's wherein a lot of time is spent over here, and the market, if some amount of time is, let's say it was 2 bars and the market moved down, it would have been helpful for us. But what it does is, it keeps consolidating. So this is a clue, in the sense that if so much time has passed and the market has moved above it, there is going to be a real fierce move on the upside. Okay, and over here what you see is, this again acts as a support when the market moves down to this place. So if you look at the order flow chart, this is not something which you see quite clearly. Of course, if you now combine both these charts, what you see is, if you look at this 935 bar, okay, we'll go over there, and you see a lot of volume getting accumulated, and a lot of sellers that have come in, and then the buyers step in, and they could never even touch this buying. So someone has aggressively first absorbed and then aggressively bought, and a lot of these sellers over here that are associated in this part or this area, rather, that is from 900 to 860, have got trapped. Now if you look over here, the area that we're talking about is this one. Okay, so look at this bar and look at the traders that are getting trapped here. Okay, so even if you're not comfortable, again, it is too early to go inside. The other thing that gives you a good place to enter is when you have this fierce move up, is this VWAP that is moving within this profile. So you can see the same VWAP being plotted here. That is, this is the VWAP, and this dotted blue line 918, 917. But if you look over here, there is a VWAP, and again this VWAP becomes significant when the slope is higher, something like this. Okay, now something like this, I wouldn't trust this VWAP, something like this. So the majority of the times you'll get a flatter VWAP. If the VWAP has flattened by the time the market approaches or the price approaches this point, I don't consider it. But this is a place where I'm seeing a slope. I'm seeing a lot of traders getting trapped. Okay, I'm looking at the order flow and I'm seeing traders getting trapped. Look at this delta on these 3 bars, and I know for a fact that if the market breaches this point, okay, we are going to get a very, very good move, that is 940, which is exactly this point. So look at the volumes that were accumulated here. Okay, and the market moves up, and as soon as it moves up, it leaves this low volume node and it just pops up like I mean, it's really fierce and aggressive. And it is not only the buying that is happening here, it is the shorts that were late in the market over here that are getting trapped and moving to the other side. Okay, so this is one very, very good way to look at the charts alongside. So if you even if you're using options, you can use these charts like this and get a finer detail into what is happening we might or we will rather try and do something like this in live markets maybe in the coming few days, so that we understand this concept better. So the next we will find another example on a trending market. Of course, after this, the market turned absolutely, I mean, range bound. And if you see throughout the day, this is one range or this area that we'll just see and consider. This whole area where we saw a lot of sellers get trapped, you will see that the market tended to just, look at this, stay within that zone and not break this zone throughout the day. Okay, so a lot of volume absorption had taken place and the market tended to just stay within that zone throughout the day. Okay, now let's get into another scenario. We will get the order flow chart back, and let's see if we can find anything interesting over here. And let's see. Okay, let's consider something. Let's consider this zone. Okay, when it happened, it's 12:35 on the 13th of August. Okay, let's go here. So what we are doing essentially is we're looking at how the aggression played out over here, and where was if the market, when it went to this low volume node, could we have found something out on the order flow chart, and then into the small volume profile chunks that we looked into. And this place is the low of the previous day, and when it breaks, that's where it takes resistance. So we're going to start from 12:35 on the 13th of August. So we'll just go there, and it is the 13th of August, and this is the bar. Okay, so look at the delta and the pickup in volume. Okay, so this is the bar what we're talking about, and if you look closely, this is where the imbalance and the order flow comes into play. So I have no numbers over here, you can see, but I can straight away see this is the place where there was an attempt to buy. If you can see, this is an orange bar, so there was buying and all the buying was absorbed and the market moves further down. Okay, this is the second place where people attempted to buy and the market moved further down. So if you see the difference from the previous example that we're discussing, you can see, like I just said, this is the place where you can generally see these bars not holding and going down, where you can enter aggressively. Where I'll just speak about that. What I would like to see is when I see something like this, it failing from here and then it falling down from a VWAP, and this is the place I would generally try and enter this POC and VWAP. What we'll do is we'll just see this is 1250, and you look at the delta that follows after this. This is a continuation bar after this, and we're seeing weakness. So what I'm expecting here is when it this VWAP test fails, we'll just look into the volume profile. I am expecting a test of this zone again, where a lot of stops were triggered and the market is again going to head over there. So what the two scenarios that are playing in our minds when this happens is that either the market goes here and we get some of our points, let's say when we enter here at least 60-80 points, and we cover our position. If the market stops or halts and does something like this and not like this, I'll just try and show you. I want an accumulation. When I would like to get out is let me see, not even this bar. I mean, this is too freaky. What I like is something like this, where a lot of sellers are getting trapped. We just look into the volume profile bar. This is 1250 and 1235 on the 13th of August. So let's go here. Let's get this chart here, and we'll go to the 13th of August. and I think this you can see the pickup in volume. That is why we have these charts, and it makes a simple, very simple for us. So now the place where we would have wanted to enter is, if you can see quite closely, this is the place where we see a lot of stops getting triggered, and the place where I would like to have entered is when the market breaks. You can see this uh, value area of this place. As soon as it breaks this point, I would be aggressive to get, because I'm expecting at least a touch of this is somewhere close to 360, so I'm expecting a touch of 320 or 340. I would really love this scalp, and the stop loss would be just above this VWAP, that is 20 points against 40 to 60 points is what I'm hoping for. So what I've done is I've broken this whole bar into small volume profiles, and I'm seeing what is happening. The other thing that you can do is, if you're an intraday player and you want, let's say 80, 100 to 120 points, is look at this zone. What you don't want is breach of this zone. So your stop loss could be, let's say if you're targeting 180, 100 points, your stop loss could be somewhere here, just above this POC zone, somewhere here, that is close to 390, and your entry point again becomes 350 or 360, whatever, 340, and you've targeted 50 points against 100 points, and you first expecting a touch of this, and then so on. When you go on and look in the if you go here and look at the charts, where you can expect a touch of this POC that is coming from behind. If you see again the same thing, these becomes your targets. Okay, these places become your targets. This is a POC which is, I think, coming from let's say this day. Okay, that is the 8th of August, if I'm not wrong. It comes, touches again, this becomes your target when you're looking to short somewhere here. So you can use these small volume profile areas if you feel comfortable. You can have a line chart here rather than having the candles if it is too overwhelming for you. But the essence is that you can break down these order flow charts, especially if you look at the options charts. There is a lot of volume and activity that goes on. So this chart on the right side really helps you get through with areas where you find it a little confusing, and demarcate areas where you want to enter and exit. So hopefully this video was of some help to you guys. Until next time, thank you, bye bye.